Hey everybody, this is Jose Blasco. Just checking the sound before we start the session. Can I have a quick message on the chat box? Just a quick hello would do, as always, so I know you hear me. I believe it's all good and ready to get started, but it's always appreciated to get your confirmation. So thank you very much in advance. Quick hello, please, and we'll be ready to start. Thank you so much. How are you, Christian? Good to see you. Good to see you, everyone. Very good. Here we go. We are live. I forgot to turn on the video stream. I'll put myself in the bottom right corner as always. How are you, everybody? Maka, good to see you, everybody. Very nice. Welcome to the session. Today it's March 10, 2021. My voice is a little bit weird today, so if I sound a bit different, I guess it's a little bit of a throat itchiness thing. All good apart from that. I hope you guys are doing well as well. Options with options is the topic for today, as I'm sure you know from the calendar of sessions. And options give us options, right? So we're going to be looking at different possibilities in the market, and most importantly, little by little, begin learning new strategies to be implemented in the room to take advantage of all sort of different types of market conditions. Okay. Disclaimer before we start getting going. Let me go ahead and click in the right place. Here we go. This should launch the disclaimer, please. The disclaimer is being highlighted on the upper left corner of your screen. Make sure you read it carefully. This is important information. Do not skip it. So you are well informed. Thank you very much. How are you, Jay Lopez? Good to see you. A pleasure to have you with us. Agenda. Hello, everyone. I believe that we have done that already. So let's continue. A quick note that I would say the majority of you now are used to it and you know how it works, but just in case you are new to the sessions, just know that we are simulcasting. That means that some of our streams are happening in our private room in our website, which you can find in tradewithufos.com/live. But also some of our streams are happening in public places such as the YouTube channel, the Facebook pages, and things like that. So just know that these may create a little bit of delays or video lags at times. So be on top of those chat box if you have a question for me, or if I have a question for you guys. Let's be timely on interaction. That way, we suffer the lags the least as possible. We cannot change that. It's the nature on how video signals are broadcasted throughout the world, using networks such as YouTube. Okay, so we cannot change that. Apart from that, there is another consequence of having private coaching rooms as well as public coaching rooms. And basically this has to do with trying to adapt as much as we can to the needs and the profiles of our traders and clients. Which basically are two groups. The ones of you that are looking at trading from a, let's say, part-time point of view, and therefore you require less sessions or less longer sessions. And the ones of you who are in the opposite group, which is the ones of you looking to master every single thing about trading, every single angle about trading, and you never got enough. You love it, love it, love it, and you always want more. So for the ones of you that need so much, then I recommend you to use the private room where the sessions are broadcasted fully. So it's 1 hour duration sessions. For the ones of you that are looking at trading part-time, just stay on the public spaces. You don't need to subscribe. Of course, you're welcome to subscribe, but you can stay on the public spaces, which is free. And the sessions will be, less duration. It depends. Some days it may be 30 minutes, some days maybe 45, some days maybe 20 minutes. I don't know. We'll see, depending on what happened that day in the market, isn't it? But there will be a moment in time where we'll disconnect the public stream and we continue in the private environment only. While the environment may be private, just know that our commitment to coaching is the same, no matter if it's private or public. It's not like we are keeping a secret sauce for the private room only. There is no secret sauce, my friends. This is trading. Okay. Anyway, so let's begin. We're going to look at the markets, review the trades, and look for new opportunities and get going this way. Okay. And getting organized, especially since in recent times we are launching double the amount of option sessions. So I have goals of certain things to be done together to help you grow in the options arena. Okay, cool. So what do we have? So let's begin with understanding the market. So when understanding the market, the first thing I want to point at is the fact that we are in an unconfirmed climate. So after 5 days in a down climate, where probability suggested it would be 3, so actually the down climate extended for 5 days. After that, the market is moving higher, but based on how price movement is taking place, auto climate does not see, let's call it, that much decision, if you wish. And it's calling it, I mean, clearly there is an up component, that's why the dot is blue, but we don't have a clear confirmation that invites for us to be aggressive, taking trades to the long side already. Okay, so careful in that environment, because an unconfirmed climate, even though it's blue color, may lead to another red dot. So be cautious. Again, if you are trading one trade at a time, maybe this is one of those days where you want to pass on trading and wait until tomorrow. If you are doing swing trades or something like that, if you are doing intraday trading, it's fine, of course, because you're going to be looking at the lower time frames. But again, this is what we see on the broad market. Okay, when looking at the VIX, that will help us understand options better. We can see that after last week, where the VIX was around the 25 mark, if I'm not mistaken, we saw the VIX rise all the way to kind of 32, and from there it's been dropping, and now it's actually 22. Okay, so people got very, very relaxed with the move to the upside that we are experiencing in the marketplace. Having said that, if the market keeps going up, and therefore the VIX keeps going down to 21.5 or something like that, notice that we got 2 green UFOs, and that is very likely going to take the VIX back up, and that probably has an impact on having the S&P fall again. So again, this is kind of confirming, especially since this is a 55-minute time frame, isn't it? So this is kind of confirming what we said about the climate on the S&P earlier, which, by the way, we can see the same type of climate on the VIX too. So again, it's looking like the market, at least for a while, maybe for a few days, maybe just going up and down, up and down. And again, great opportunities for intraday traders, probably good opportunities for non-directional trades too. But when it comes to being purely aggressively directional, probably it's one of those times where it may be better to wait to see the market defining itself, get to see those climates to get confirmed, and then attack again. So caution in that sense would be my suggestion, my comment in this beginning part of the session. Okay. With that in mind, and everybody, feel free to type your questions, comments anytime. Don't be shy, especially if you are in the public environment such as YouTube and so on. I find that sometimes you guys are shy to type and things. My friends, we're here to help. So don't stop yourself from asking questions, no matter if it's basic or advanced. If it's very basic and we have some videos to help you, I'll point at that. If it's more advanced, I'll certainly address it, when the right time is. If it's a bit later in the session, let me tell you that. But you ask the question whenever you have it, guys. Okay, don't stop yourself. Okay, so second part of the session is about reviewing what we got. What we got so far is a trade on Facebook, a trade that was initiated on February 4, with an expiration date on March 19. We've been commenting on this trade since February 4, which is when we started this trade. It's an iron condor. It's a pure iron condor. We are treating this trade without any sort of management, even though I made a few comments of things that you could have done during the life of the trade. But again, this trade was started before, we are now running 2 option sessions a week instead of 1. And this trade started before, so I'm just letting it be all the way to the expiration date, and we'll just comment on it, and that's it. Okay. Again, in starting today and future sessions, we are getting more advanced one step at a time, and we'll learn to do many things that are powerful. Okay. But in any case, again, this is the beauty of planning your trades and letting them be, and relying on probabilities. And of course, sometimes we get losses. But when you plan the trades properly and you stack odds in your favor, while there is no guarantee in trading, odds are, or statistics suggest that you should be fine most of the time, or more often than not. Okay, and in this case, I am loading Option Station Pro. I'm going to show you how to do this. Okay, so I'm going to go to the option station. 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 And I want to show you, if I load Facebook, okay, so loading Facebook. So I want to show you, I want to recalculate the dotted lines that we have on the chart, which when we started this trade all the way in February 4, the dotted lines were probably, up there and down here. But as Facebook has been moving up and down, we did benefit from all those UFOs that were in the middle of the range, isn't it? Because it created all of those bounces, okay? All of this was happening because of the UFOs. All those UFOs allowed for price to stay range bound for longer, and that is the recipe for us to collect time decay. So we definitely welcome that. Now, what is to be expected? Well, when you look at Facebook, okay, and we look at the iron condor we have, which, by the way, this iron condor is currently showing $46 of profit per contract. So you would now look at probabilities, and probabilities suggest 280 to 249. That would be the price range for that stock, 280 to 249. So that means that from now until next Friday, meaning next week, okay, we would expect that stock to remain between the dotted lines, which is indeed a very good place within our purple zone. I mean, unless a very powerful move happens, which could, but of course is unlikely based on probabilities, as we can see, and most importantly, because we have UFOs there to avoid price to go too far. So again, something really spectacular needs to happen for us to end up in a loss. Again, I'm not saying let's be overconfident, let's take the trade with a million contracts and close our eyes. Of course not. We always manage the risk, we calculate how much risk per trade, we decide how many contracts, etc., etc. But definitely this trade is looking very good for us to have a congratulation message for the ones of you that took the trade, because it's all working according to plan. Okay, good. So far, out of the agenda, we've gone through two items, which is to review the market, review the trades that we have running. So now it's time to look for new trading opportunities, which obviously is the richer part of the session and is the most exciting one. So what I'm going to do is the following. I'm going to be clicking on the non-directional portion of the scan. I got 5 symbols today. ABT, Abbott, Biogen, Facebook, FedEx, and Nike. I know FedEx and Nike are about to report earnings, so we may not be able to take a trade on those. The other ones I don't know by heart, so we're gonna look at it. So we got 5 symbols, up to 5 potential trades to be planned. I'm gonna look at those. Hopefully we'll find a trade, and if that's the case, we'll execute it, and that would be great. Let's say we don't find a trade, so then we'll continue working on other possibilities. I want to start looking at other trade strategies to be discussed with you today, guys. And again, in order to be able to do this, we're gonna have to spend a little bit of lecture time if you wish to, right? So probably that would be the time when we go over these 5 symbols. That would be the right time to disconnect from the public streams and continue in the private room. Okay, so we'll see how it goes. And you guys, again, one more time, feel free to ask questions along the way. So let's begin with Biogen. Notice I sorted the prices from more expensive on the top to cheaper on the bottom. So I started with Biogen, which is loading right now. And the first thing that we can see is that earnings are happening on April 21st. So again, if everything was to be good for us to take a trade on Biogen, really it's looking good in the sense that we got many expiration dates in front of us. We still got like a month over to get to the earnings date, and therefore we can use next Friday expiration or next Friday expiration. We are also dealing with a stock which is $200 over per share, meaning that we should find good premium. Also, it's a biotech company. Normally, those options are quite pricey because there is a decent amount of risk involved with trading biotech companies because normally they are volatile. But again, as long as we are using our calculations, our UFOs, and so on, volatility is not necessarily a bad thing. Okay. Hello, Joanne. Good to see you. Very good. So, okay, so I just got a timeout message here. I'm not sure why that happened. Let me try to type Biogen one more time and see if Biogen will load this time. To be honest, is okay. Now it's loading. Let me see. 1 second, guys. Sorry for that. I just want to double check that this is the case. I believe so. Yes. So Biogen is now showing the option chain. Okay. Now, this is why I'm loading the option chain right at the beginning. Okay. My experience with Biogen. I mean, I have a few anecdotes I could share with you if you don't mind with Biogen. Biogen was one of the first trades I ever traded live ever in my life when I started learning how to trade years ago. And I remember trading that stock intraday. That was one of my early trades with live capital. And I remember trading intraday, closing the trades before the market closed. And next day, Biogen gap 25% down because there was a news in Ireland where some people died taking their drugs. And it was like, wow, it was what a big lesson for me, years ago when it comes to how problematic a gap on a stock could be. Okay. So now I know this company, again, I'm sensitive to it. And I remember that as a stock, trading it intraday was very nice because it's very volatile. But from an options point of view, while there is decent premium built in, okay, I mean, if you look at the implied volatility, we're talking about 45%, the implied volatility 45.98%. That is double the implied volatility of the VIX, isn't it? So that's powerful. But also I remember that liquidity is often disappointing. Okay, and you can see there's been no contracts traded today. I mean, the market opened not so long ago, but definitely like an hour and a half ago. It's enough to have more than one or two contracts that we do. And the problem then is that you can see the spread is quite wide. So before I spend time on the chart, I would like to look at the next monthly expression and see what happens. And I can see the same problem. Zero contracts, even at the money, $3 of spread. So again, I've seen Biogen at times, and don't ask me why, because I wouldn't know. I've seen Biogen at times to provide very decent spreads, one day or two, randomly like that. I guess market makers were eager to make markets and get some trades on that stock, but then suddenly liquidity disappears as today. Okay, so no trade with Biogen because you want to be able to get in, but also you want to be able to get out. And with that type of liquidity, we're gonna get hurt on the way out. Even if you were to shave the spread and you were to get filled in the midpoint, then let's say you want to get out. Now what if you cannot, right? So it's a shame. Probabilities are 56%. Remember, our minimum required for non-directional trades are 48% of UFO performance stats. And we got 56%, which is a luxury for stocks. Stocks are always lower values compared to futures and Forex, isn't it? So all of this is good, but again, there is no liquidity in the options arena. So we are going to pass, okay? Very good. Thank you so much, Joanne and Maka. You guys are so kind to me. Thank you so much. So we move into the next one, which is Facebook. And we're going to look first at the earning date. Facebook has earnings on 4/28. We have a trade running on Facebook. So you would say, what would you want to take another one, right? So again, what I'm going to do is I'm gonna go for the next one in the list, which is FedEx, okay, and go all the way to the end of the list. If I was not to find a trade, then I would come back to Facebook and pretend I am not in a trade and start again, because conditions are met for us to plan a trade. And I assume that not everybody is in the Facebook trade that we have running at the moment. So then I'll be happy to plan on a new trade on Facebook. But again, let's take a look at FedEx, which again, FedEx and Nike, I believe, are going to be reporting earnings very soon. 3/18 is the earnings date for FedEx. So when looking at our calendar, notice that 18 is right here. So we cannot use 19. Okay, 19 would not work because earnings would happen before the expiration date on the 19. And of course, a non-directional trade is a trade where you expect the market to remain quiet. If next thing you know the market was to move crazy, well, that's the opposite of non-directional trading, and that's what tends to happen with earnings. Sometimes the market do accelerate their speed of movement. Okay, so we cannot use 19, but given the fact that FedEx is trading at $250 a share, we could attempt. This is normally a case where you try and it doesn't work, but we could attempt to make a trade work using a March 12 expiration. So again, I'm not too hopeful that the trade would work, but I always like to try, because when they work, those trades are extremely high probability, because the speed of time decay with 2 days and a half to go for expiration is going to be humongous, and therefore those trades are very, very likely to work. So in one hand, we are or maybe likely going to waste a little bit of our time because those trades are not often working, but it's always worth it to check, because if they work, if they pass our rules, then the speed of time decay is so fast that those trades are very high probability. Of course, we need our rules to be met, and first of all, I got a bit of a concern here with 47% probability, which is not meeting our minimum criteria of 48. So again, I'm not giving up yet. I still need to look at pre and post market, where we often find better probabilities with pre and post market, which is not the case with FedEx, with less institutional interest during pre and post market data, as we can see. Okay, so we're gonna have to pass. I thought maybe, but it's gonna be a pass. So what about Nike? Looking at Nike, we are going to be loading, and we have the same expiration date on 3/18. So my comments are going to be exactly the same. Okay, so we're going to try to make a trade work using 3/12, March 12. 41% with pre and post market, it's definitely not acceptable. If we move to regular session, we get 50%, and that, my friends, is indeed acceptable. So we are ready to get into planning mode. Okay, we are ready to get into planning mode. Okay, now if you've been with me in the sessions for a while, you're gonna be thinking probably, Jose, we got a problem. Okay, and the problem is that one of our rules suggests that we need at least 2 UFOs above and 2 UFOs below to set a range for a non-directional trade. So if I was to set my range to use those 2 UFOs below and place my bottom portion of the range at 116, I haven't even checked probabilities yet, right? But let's say I was to do that. Well, again, with 2 days and a half to expiration, the 116 is going to pay nothing. Okay, so I'm going to load Nike, and you will see how the 116 is going to have extremely little premium available. Okay, so why would you want to do in a normal case? You will just pass. Okay, and go for the next one. But I'm not going to pass. And I will explain why in a second. Okay. In any case, let me show you first how the 116 got nothing. Okay, so we have 119, 115. Okay, and even the 119 only pays 4 cents. In other words, that strike is way too far away. I mean, yeah, probability is humongous if you sell it, but you get paid nothing, which is it's a very high risk proposal. Okay, so we just don't do that. Okay, now why did I say that I am ready to take this trade, even though I don't have premium enough with 116, or my UFOs below are too far? Well, I'm going to make an exception here, which again is not an exception out of the blue, kind of improvising. I'm going to make an exception, which is an exception. Probably I never commented on this in the room, but this is basically when you do a trade which is very, very short term, like 2 days to expiration, right? 2 days and a half to expiration, to be precise. So something I could do, which makes a lot of sense, is to go ahead and instead of rely on the 55-minute time frame UFOs, I could go ahead and use UFOs located on a lower time frame. In this case, I'm going to drop to 21 minutes. Okay, why is that a valid choice? Well, because again, since you got less time to expiration, you have a faster speed of time decay, and also because the premiums pay less, you want to sell premiums closer to price, and then on top of that, because you got little time to expiration, your probabilities, your dotted lines that represent the statistical range, are basically going to allow you to do something like that. Okay, so Let me see. Just 1 second, guys, just to make sure. Yes, correct. So 1597, okay, that's the amount of bars I want to load to have a proper probability calculation for the UFOs. And when I do that, I get on the 21-minute time frame 61%. By the way, just to throw an additional comment here, common belief out there in the industry would suggest that the larger the time frames, the more powerful buy and sell zones and things like that, support and resistance areas, and so on. And while they are very relevant for market analysts, they are less relevant for algos that execute trades at the speed of the light with computerized trading systems. And you can see that very well here. When we run our stats in our time frame, notice how the UFO performance stat is higher. Okay, why? Because in those lower time frames, those on-field orders tend to be canceled less often because computers are executing them. Where if you were to go all the way to an extreme to look at, let's say, the weekly time frame, so again, you have good stats, okay, but probably the daily time frame is the worst. Why? Because that's the one used by the least amount of traders. Is the one used by the greatest amount of market analysts who are not necessarily placing those orders. Who places the greatest quantity of orders in the markets and the world in which we live nowadays? It's computers, okay? So again, it's a good insight to be able to see that. In case you never thought about it, just thought sharing that thought would be interesting. So if you are with me on the fact that since I'm using such a short expiration date, I'm opening the door with Nike to go ahead and using a lower time frame. So I'm going now to go ahead and follow my normal process that has me insert a random iron condor in my analysis tab. And the reason why it's random so far, I just clicked in any of the strikes. The reason why it's random is because the only thing I cared about so far is to pick the expiration date, so I get my one standard deviation above and below calculation that tells me about the statistical range from now until Friday expiration, which is supposed to be 133 to 141. So what I'm going to do now is move this to 133, somewhere around here. Okay, and this to 141, somewhere around here. And now, thanks to this mathematical calculation based on probabilities, I know where price is likely going to be from now until Friday. Could it go above and below? Yes. But it is less likely compared to price to remain between the dotted lines. So what am I going to do now? Well, now I'm going to find my two UFOs above and below. And if I was to start, from the bottom part, for example, so this would be my second UFO, UFO number 1, UFO number 2, and it's indeed beyond the dotted line. So 131 is going to be the strike that I want to sell. And then if I was to calculate the vertical distance between the current price and that bottom strike, sorry for that, I just clicked on the wrong place. I didn't want to extend. Here we go. So this line represents the vertical distance from the current price to that line. So if I was to project it to the upside, it would show me which UFO to use on the upper side of the range, which is that one, which in this case I got 1, 2, and 3 UFOs above price. I mean, the minimum is 2. It doesn't have to be 2 above and 2 below. It's at least 2. Okay, so again, what is my expectation? And we don't know still if the trade will be accepted or not. But again, remember, those very short-term trades often end up giving us a no-go. But it's so good to check because if they work, it's very powerful. So I'm just adjusting this to be 3:12 expiration. So 3:12, 4 p.m., that's when the market will close on Friday. And basically what I'm saying is, as long as the market remains on the purple area, meaning between 142.86 and 131.27 from now until Friday expiration. So that's the purple area, isn't it? So as long as the market remains in that purple area, we're going to set up an iron condor to be profitable. Okay. Now, it's time now to move into looking at the strikes and see. Let's start with a 143, for example. Let's see if the 143 call pays enough or it doesn't, because maybe we did all the calculation and then we don't get paid enough, which is what often happens with very short duration options. Okay, and unfortunately that's the case. Okay, so the 143 call pays 10 cents. Our minimum to accept the trade is 35 cents. This is one very easy rule that we use all the time, that we never break. I mean, we never break any rule really, but that one it's critical. Okay, because if you don't get paid enough, why do you even take the trade? You're taking a risk in exchange for nothing, right? So 35 is the minimum, and unfortunately 10 cents it's not enough. But in any case, don't ever stop yourself from looking at those possible opportunities. Okay, you can see as well that implied volatility as an average on the front week is much less than the next one. Of course, the next one got the earnings built in, isn't it? But sometimes, not often, but sometimes you will find the premium you need. And next thing you know, I guess even visually speaking, even if we didn't do probabilities and I was to plot this chart in front of you and I was to ask you, hey, do you think this market will stay within the purple area from now until next Friday? And I would be pretty positive that all of you would agree that, wow, that's a very wide range. It's very probable. And yes, it is. So if it's very probable and you get the premium, those are extremely powerful trades. We tried, it didn't work, so we go for the next one, which is Abbott. I'll take a sip of water if you guys don't mind. Very good. Is everybody with me so far, guys? Everybody with me? So what do we have with Abbott? Okay, so first of all, with Abbott, from earnings point of view, earnings are happening on April 15, which certainly is giving us plenty of flexibility when it comes to doing our iron condor. We can pick so many different expiration dates. That's great. Probability in the 55-minute time frame is great, 52%. We only need 48. We got 52. That's good. If we look at pre and post market, we get 32%. So clearly, institutional interest in the case of Abbott is found in the regular session. Okay, so we're gonna rely on the regular session only, and in this case there is very little to discuss. We're just gonna load Abbott and go through the same process that we were running with the prior stock. Okay, so we'll start with March 19, and I'm just gonna right click to analyze and sell a random iron condor. Again, just get rid of everything. The only thing I care about is the fact that I got March 19, which is the next expiration date, and then I got one standard deviation above and below, bringing those price points to 125 and 112 something. Okay, so 112 something and 125. So 112 something is more or less here. 125 is more or less here. Here we go. So this is the statistical range where price should remain from now until the expiration date. I have an issue, and let me explain. The issue I have is that if I draw my UFO above, which is nicely located beyond the dotted line, so that's perfect, and now I was to calculate the distance from the current price to that UFO, okay, and I was to project that below, right? So then in a perfect world, I would find a UFO located here. But guess what? There is no UFO here, okay? There is no flying saucer, okay? So what's the issue? The issue is that the next one is much lower. And of course, I need to use my rule of 2 UFOs. And if I do that, this is going to be an imbalanced iron condor because I am not starting in the middle part of the range, okay? So, is this good or bad? Well, it is not good. It is not good in the sense, okay, it is not good in the sense that, if you were to be like totally neutral, like close your eyes and just think of waiting all the way to the expiration date, the ideal starting point is exactly in the midpoint of the range, which would be, let's say somewhere here. Okay, that would be equal distance from the above and the below lines. Okay, so that would be perfect. Why? Because let's say you know nothing about trading. Let's say you don't know UFOs exist. So putting yourself in the middle part of the range is giving you the theoretical greatest opportunity from a point of view of being the furthest away from possible, from both angles, from being wrong. And if you are going to be wrong because you are the furthest away, you are likely to going to accumulate the greatest amount of time decay as possible. So again, even though we know how trading works, we like to start from the midpoint because it does create a statistical advantage. But what happens today? We are not in the midpoint. And what happens today? I don't have too many trades to choose from. I got 5 from my scanner, right? So what can I do? Again, if I think about it in a way that is a bit more advanced, I could use other tools. In this case, AutoClimate. So what is AutoClimate telling me? Well, AutoClimate is telling me that we are in a down climate. And on top of that, we happen to be inside of a green UFO, red UFO, I should say, which is lining up with our reference value, where, when price gets to the reference value, tends to drop, gets to the reference value, tends to drop, gets to the reference value. Well, not a guarantee, and definitely the climate is a bit exhausted, 5 out of 3, but certainly there is a directional component there, and therefore at least you would expect a bit of a fight for price to continue higher, more likely to go lower. But if it was to go higher, you would expect a little bit, at least a fight. And a fight means what? A fight means time spent inside the range, bouncing around before breaking up to the upside if that was to be the case. But what if price was to break up to the upside? Well, count how many UFOs you have. 1, 2, 3, 4. Count how many UFOs you had below. 1, 2, 3. So true it is that I am not in the middle part of the range, but I guess you are with me that with the auto climate in my favor and with more red UFOs than green UFOs, it is not a crazy choice to explore if this trade meets our criteria, because if it does, I'm going to be happy to put it together and execute it, given the fact that while I am not in the exact middle point of the range, which is the perfect starting point no matter what, with all those additional ingredients I just explained, again, it is reasonable to go ahead and put this trade in. Now, some of you listening to what I just said may be a bit more conservative, and in prior sessions, until we added more sessions in what we do, I was very conservative myself on my approach on how to teach you, because my concern was we meet 1 week, I teach them how to trade, I put a few trades out there, and then they are by themselves the whole week. So I always want to keep you safe. That's my first priority. But now that we're spending a bit more time together, so I'm opening the door to give you additional variations of things that make sense to do, which of course you need to assess yourself and make sure you understand if it matches your personality or not. If you were to be more conservative, maybe you don't want to do it. If you were to be a bit more aggressive, just a tiny bit more aggressive, not even aggressive, just a bit more open to take risk. So I would say what I just said makes sense. And please feel free to comment if you are with me in the fact that what I said makes sense, that we are not in the middle of part of the range, and it still makes sense to go ahead and plan the Iron Condor. If you were to tell me, Jose, this is not for me, I would totally understand, but that would probably mean you are very conservative as a trader. If you are not conservative as a trader, I would love to hear from you if you are with me on the rationale I just explained, okay? So you can apply it to yourself in other trades throughout the week. Cool. So, hey, let's go ahead and go for it. We are going to look at, first of all, the strike, which is the furthest, which is the 108, and see if the 108 is going to pay us enough. And the 108 strike, and you're going to laugh at this, the 108 strike only pays 28 cents. And you're going to be like, Jose, oh my God, You spend all this time explaining all those details, which, open the door for us to take the trade. And next thing you know, we look at the option chain and we are not provided with enough premium. And the answer is yes or no. We don't know yet. Why? Because the rule that we use is we want at least 35 cents for the options that we sell. But if the option that we're about to sell is below 35 cents, in the case of an iron condor, but the other side exceeds 35 cents in a way where when adding 28 to whatever value we get paid for the calls, you were to get at least 70 cents, which is 35 times 2, then we will also accept the trade. Okay? The only time we would not take it if that value is less than 25. So less than 25, then forget it. That's it. Okay? That's it. Less than 25, we don't even think about it. But if it's more than 25 and less than 35, we're going to look at the other side. And if the two added together is 70 or more, we're still going to open the door to take the trade. Okay? So what is the other side? Well, the other side is the 125, 126 call. So let's see what's available. 125, 126. Okay, and unfortunately, we're going to have to give up on the trade. I guess that the VIX going down today, it's playing a little bit of a game with us. 34, 30. First of all, they are both less than 35. Okay, but even if they were to be more than 35, let's say it was 40. Okay, so let's say it was 40. So if this one is 40, okay, and the other one was 28, you add them both together, and how much is the sum? Well, the sum would be 68, which is less than 70, and therefore we could not accept it. Okay, but in this case, the math is even easier. None of the sides of the condor, it's paying us 35 cents. So using March 19 is not acceptable. What's my only alternative to try to find a way to make this work, which I believe is going to be difficult? My alternative would be to move to the next expiration date, because then I'm going to get more premium. Okay, so if I do 26th of March, of course, the 125, 126 now they pay me $1.12. That is way more than 35, so that would work. What's my concern though? Well, if I move my one standard deviation calculations from March 19 to March 26, now it's telling me 110, 128. And 110 is fine, my friends. Okay, 110 is here. Not a problem. Not a problem at all. But what about the upper part, which is 128? Okay, so the upper part is 127.90. Let's call it 128. So what's the issue? Well, there is no UFO beyond that. I got plenty of UFOs below that, but not beyond. Okay, unless, let's look at the monthly time frame. There was market data on the left, but notice that the highest price point that stock has ever been traded has been in recent times. So when looking at my, when looking at my 55-minute time frame, that highest price point actually represents all-times high. Therefore, there is no market data above this point, and therefore there is no way to know where unfilled orders are until when the market reaches above that price point. So I cannot do an iron condor on Abbott, even though at some point it looked, that one I have to say I thought it would work using March 19. I guess the VIX going down today, it's kind of killing the premium. So let's look at Facebook. Okay, this is gonna be our last attempt for an iron condor, and then we will change topic. Guys, I would need some feedback from you guys. Is everybody following? This is very important for me to get a bit of feedback from you guys, even if it's a quick one, all good, something like that. But please share with me if so far all is good, especially since I added new components and new information today, guys. I want to make sure everybody's following. So we are back to Facebook again. I'm going to have to work with two purple boxes. I hope you guys will follow. Why? Well, because we got two trades, right? The trade that we have running already with Facebook, which is working very nice, and the one that we are about to plan, which is based on the fact that earnings are happening on April 28. Okay, so we're gonna keep that in mind, April 28. And with that in mind, we can use many expiration dates. So what I'm gonna do is go back to Facebook. Okay, wait until it loads. I have a position here, an iron condor, so I'm gonna make sure I uncheck it. Okay, make sure you uncheck it. Okay, so you don't get that. And then below, I have an iron condor, which is the one I use to calculate my March 19 expiration. So I'm just gonna use the same, to be honest, even though I will likely end up changing the strikes. But I'm gonna use the same with March 19 expiration to calculate my standard deviations above and below, which is 280 and 249. We said that before in the session, to be honest. So I got the lines already in the right place. So 249, 280. Okay, so what do we need? So we need UFOs above and below. That's what we need. Okay, we got 59% probability using regular session data when looking at pre and post market. We got 53%. So in both cases, okay, we got very good probability, lots of institutional interest during pre and post market, as well as regular session data. So plenty of UFOs to be utilized. But having said that, based on what I just saw, notice what happens above the dotted line. Okay, no UFOs in all that space. And when I switch to regular session, there is one UFO, but guess what? He's located exactly where we have already one UFO from the current trade that we have running currently. So before I waste any time, I want to look at 303 to see how much premium is left, because I would guess probably I'm going to have to use a further expiration date. So using March 19, the 303, which is going to be 305, only pays 18 cents. Okay, so notice that, by the way, we have here the -1, meaning that we are short one of those, which is the current trade we have running. Okay, so again, this trade is working fine, but March 19 as an expiration is not allowing me to take a trade in the sense that premium is not enough. So I'm going to have to use March 26, 305 in this case, we paid 33 cents. That may be enough or not, we'll see. But in any case, let me change to March 26 on the analysis tab to recalculate our probabilities. Of course, I need to check mark, which is 285 and 245. Okay, so 285, 245. So 245, 285, somewhere there. So definitely using that UFO would be great. And if I was to do the same thing I did before, calculate the vertical distance from here to here. Extend right, no. And then I was to project this below. So this would bring me to kind of that UFO. Okay, kind of that UFO. I mean, the one below may give us a bit more wiggle room. But at the same time, I'm fine. Again, if I do the same exercise, the climate is blue, so it's more likely to go up than down. And I got 1, 2, 3, 4, 5, 6, 7, 8 UFOs to defend myself below, and 1, 2, 3 UFOs to defend myself above. So in other words, price is more likely going to go up, or if it falls, react and go back up, that going down. So being a bit lower, being a bit closer to the bottom part of the range is something I welcome. So funnily enough, the iron condor we're about to plan will be utilizing the very exact same range that we had before, from 303.74 to 229. Okay, so how much we get paid for the 229 put, which is going to be the 230, it's going to be 84 cents. And how much we get paid for the 300 over, we have the 305, and that's 34. So guys, perfect example of what I explained before. Okay, so 34 is less than 35. So in one hand, you would say no trade. But if, because it's more than 25, and then you look at the 230, and the 230 pays in 82, so 82 plus 34 is indeed greater than 70 cents, isn't it? Therefore, this trade is so far accepted to the point of continue the plan. It's not fully accepted to the point of us executing, but definitely accepted for us to continue planning. So let's go for it. And actually, I have the strikes from the last time, so this is going to save me time. So 305, 310, and then below 230, 225. Okay, it's the same story. Let me document it on the chart so no one is lost. Okay, so if I type it on the upper part, we're going to be buying the 310 call, selling right below the 305 call. All of this is done using March 26, 2021 expiration date, and all the way below the range, we're going to be selling the 230 put and buying the 225 put right below. Okay, so this is the trade that we are putting together. Again, it's an iron condor, and as long as price stays in the range between today until March 26, which is right there. So let me use it right here, from here to here. So as long as price remains on the second purple range, okay, which as you can see from a probability standpoint looks pretty nice. Okay, very little time to pass and very wide range, vertically speaking, isn't it? So as long as Facebook remains in the range, then this trade will end up being profitable. Now, let's find out if this trade is to be accepted or not. And I have to say that unfortunately, we will not be able to accept such trade. Okay, why is that? Because we have a rule that says that we look at the spread, which is the difference in strikes, which is $5. Okay, $5. And what we want to see is that the premium collected is at least 15% of the raw risk. Being the raw risk $5, 15% is 75 cents. So for us to accept this iron condor, this premium needs to be at least 75 cents, but we don't get that. Okay, we get 28 only. Probably there is a little bit of lack of liquidity in some of the strikes, maybe on the call side because it's so far out. No, actually, there is not that much problem of liquidity. It's more the fact that we get paid very little. So no problem. We're going to do this trade. We're going to try it using April 1st. Okay, just looking at the strikes. We get $1.20 of premium on the bottom part. On the upper part, we get 57 cents. So all looking good to me. The question is, what about probabilities? So moving to April 1st, this is giving us 289 to 243. So 289 to 243, still within the range, therefore still valid for us to accept. And if we were to do this trade, it would be 41 cents, still not 75. So let's go for the next one, which is April 9. April 9 giving us 58 cents. No good. What about April 16? April 16 gives us 75 cents or more. So that's to be accepted. Again, what was the earnings date? April 28. So April 16 is indeed valid from a premium point of view. But before we get too excited, what about probabilities? 296 to 237. 296 is where? Yes, is good. 296 is here. 237 is there. So my friends, we just found a valid trade on Facebook to be executed using April 16. Okay, I'm just moving these to closing time of the market, 4 p.m. New York time. and therefore we are betting on another range similar to the trade that we had before. It's actually a shorter range in time, as you can see, so a bit better, okay? And this trade is valid to be executed because we do collect 35 cents or more for the strikes. Let me show you this properly. So April 16, we collect on the 230, we collect $2.22. On the 305, we collect $1.31. So both are 35 or more. And when looking at the raw risk, we get 75 cents for the condor, which is at least 15% of the raw risk of the trade. Okay, so the trade is accepted. You can go ahead and execute the trade by just right-clicking on the dots and click trade. I want to do it using a different platform. So I'm going to use Thinkorswim to do this trade. So this is Facebook. So looking at April 16, I'm just going to go ahead and analyze and sell an iron condor. We said on the call side, we are selling 305 and buying 310. Okay. On the put side, we are selling, what did I say? I want to make a mistake. 230, 225. So 230, 225 is what we buy. Here we go. This shows 77 cents. Okay, that's good. And therefore, I'm just going to right click to confirm and send this trade. I'm going to do this trade with one contract. Okay. By the way, you could see the risk of the trade would be $423. That would also be the margin required to do the trade. And if you're right, you're going to make 77 on this one. Okay. So I'm just going to execute, send. Okay. And I will be filled in just a minute. Okay. Here we go. Just going to trade there. Well, interesting, for whatever reason I haven't been filled. I guess I will in a minute. Okay, so we'll double check that later, but the trade will appear here in just a bit. Okay, cool. Okay, so my friends, we have a trade. I'm just gonna mark it 2 here, and what I'm gonna do now, we are basically reaching 1 hour in our session, so we are basically reaching the time for our disconnection activity for everybody, because it's the latest. Basically, the full 1 hour went by. I was just struggling a little bit with only 5 opportunities to find my setup. But as you can see, patience pay. It's important not to break the rules, because breaking the rules basically puts you in a position of short-term happiness because you have a trade, but longer-term problems because now you have trades of a low quality. So we don't break the rules, okay? And it's important to understand all of them. Of course, options give you options. So there are many rules, sometimes rules within rules, sometimes rules that allow you to change the rule. And therefore, we just need to keep spending time together and working together and you guys need to be practicing this. So you develop muscle memory, and then those rules are embedded on how you trade. And again, when I do this for myself, and I don't mean to brag about it, but it really takes very, very little time for me to, find a trade or not find a trade and go for another symbol. In the sessions, of course, I want to add the thinking process behind the scenes, so you guys can start thinking like we think. This applies to all our coaches. So you guys, on your own time, you can learn to do this by yourself properly. Is that making sense? Of course, these require time. Okay, so anyway, I appreciate very much you guys joining me today. Any additional question, comment? It seems that we just got filled on the trade, so it took a little bit of time, but that's it. We are in the trade. Quantities are here. Okay, so if you look at the P&L now, Thinkorswim is quite benevolent with fills in a demo account. Okay, I am using a simulated account, as you can see here on the upper left. Okay, simulated trading. So thinkorswim is quite benevolent because it gets you filled at the midpoint of the spread. If I had done that on TradeStation, let me show you. Maybe this is an interesting thing for you to see, and then we'll call it a day. So if I was to do this with TradeStation and I was to use a market order, I'm gonna get filled at 71. Okay, so place order. Yes, TradeStation will not get you filled in a demo account for options unless you are using if you're using a market order. Limit orders will not get filled for options. You need to know that. We commented on that before. So what happens now here on Facebook, I got so many things here. So if I was to put it all together, I have the iron condor using March 19 expiration. And if I was to aggregate all of those trades together, okay, give me 1 second. Delete this. Just needed a bit more real estate. Here we go. So what happens now? Well, now you can see that they have 2 iron condors. Okay, let me clean this better. 1 sec. One more click, and it will be obvious to you. Here we go. So what do I have? I have 2 iron condors on Facebook. One is March 19, one is April 16. One got 9 days to go. The other one got 37 days to go. And notice that the one I just got a PNL of minus 4.5, minus 5.5, minus 6. Okay. What happens on thinkorswim? Plus 4. Okay. Why? Because the simulated account on thinkorswim will always fill you at the midpoint no matter what, which is not totally realistic. It's not realistic either to get filled at the market price, because you would never do that, isn't it? You would always use a limit order and try to shave the spread. But again, that's how TradeStation handles simulated accounts, and that's how thinkorswim handles simulated accounts. Expect me, by the way, to use many more tools, both for execution and also options analytic. I will bring very advanced options analytic tools into the sessions, as well as I will bring other platforms. Today, I just added thinkorswim. I will add IB at some point. Again, we're going to do lots of stuff as time goes by, okay? Everybody, you guys take care. As always, my super pleasure. Always very grateful of you joining me, and always very, very happy, big smile on my face to see the familiar names. And for the ones of you attending for the first time, welcome to our community, my friends. Always a pleasure. Don't be shy if you're new. It's all about interacting and communicating, and you can certainly send an email anytime if you have questions using support at traddictiv.com, and it will be on top of your questions with powerful answers. Take care, everybody. Maka, you are waiting to get filled on your real account. Get you? Very good. And you haven't got filled using thinkorswim, haven't got filled, still waiting for the fill. Very good. So thanks for sharing, Maka. This is exactly what I was talking about, the fact that thinkorswim is benevolent. So again, let me show you this on TradeStation since I have it here. So if you look at the bid price and the ask price, 71 to 83. Going for 77 makes sense as a starting point. Midpoint is always a bit demanding. Remember, our minimum is 75, and 75 is also one of those, let's call it round numbers, like 0 and 5, right? So I would say if after, let's say, 10 minutes you haven't been filled, just move your asking price to 75. And I would say if you wait another 5 to 10 minutes, you should get filled, I would say, based on my experience. But if you don't, just stick with 75. Don't go below. Don't chase it, okay? Stick with 75. And if you don't get filled, so be it. Plan the trade or review the trade tomorrow, and then you may get filled tomorrow, okay? But don't force it. Less than 75, we don't want it. Very good, everybody. You guys take care. Super pleasure, as always. See you tomorrow. Same time, same place. Bye-bye, everyone. Take care.